borrowers, as lenders, as investors.
Yes,
This is a
yes.
very good one. So let's dive into it. Welcome back, alchemists. This is Abundance Thursdays with myself, Gualter Amarelo, and the great Vinney Chopra. Vinny, where are you today?
Oh my gosh, I'm over here in LeBlanc Resort and Spa in Cancun. We just came here a couple of days back. We'll be here 5 days, and it's really fun to take time away, take time off, and it's a reunion for the family. We meet it every October. We try to do it. Yes, yes.
Family meeting reunion in October. It sounds like a very good time. Today's wealth principle we're going to dive into is wealth principle 50, never give up. So this is one for people who are we're heading into a downturn possibly. I'm not a mind reader or a soothsayer, or I don't
Yes,
have a
yes,
crystal ball, but I can
yes.
read the charts. I can read what the market's doing. Vinny, you've seen it in operators. I've seen it in I see on the lending side a lot of lenders telling me, "Hey, man, the operator's not paying me anymore. What's going on?" And I now have Vinny, 18 plus 8. That's 24 lenders who've called me about other people's deals, not mine. My lenders are all getting paid, but
Yes.
other people's deals, and it's mostly single family flips that are having the hardest time in my world. That's what I'm seeing. Um,
Wow.
so
Wow.
Vinny, we're gonna go to you for advice on how to stick with it, because you've been in this business for longer than I have. You've been in the business more than 20 years.
Yeah, more than 20, brother. Yeah. I mean, single family for more than 40 years. But you're right, multi-family, hotels, senior living for 20 years. The biggest thing I would say, Walter, is that you got to just be looking at talking to the lenders to find ways to keep the equity alive. That's the number one goal, because the banks don't know, they don't want these homes on on their table or whatever, because they're going to go downhill. So finding ways is the best thing. I know some of my partners, different companies, they're starting debt funds. So debt funds are to bring the liquidity into the deals that you want, but give them 12% debt or 13% debt or 11% debt. So that way, but the deal has to be good. You don't want to put good money after bad money. That's the key. Sometimes the investors get panicked, and they say, "Hey, I'm going to lose my 100 anyway. Why should I pay that 17,000 more? Which can really go down the drain." So you got to have it as a debt fund, so that whenever you sell the property or refinance, you cash out the debt people first.
Oh, this is cool. This
Yeah.
is wow. I didn't know we were going in that direction, Vinny. You and I had not talked about that, but I'm a huge believer in debt. Right, so I absolutely, you know me. I've been running a debt fund for a year now, and it's debt is
Yes.
like my
Yes.
instrument, right? Because it's I look at it as a safety, a safer tool. So going back to this principle of never give up, we're going to talk about it from the side of the investor. Now, I do want to address this first with operators. You and I are both operators. You operate way more than I do, but the size of operations is less important than the fact that we have some standards, right? If something goes wrong in a property, let's say a property ends up over leveraged, which is we aim very, you said it right before this call, that's all solved in underwriting, like very strong underwriting. So let's walk through what are some steps that an underwriter can do, an operator can do in the underwriting phase to make sure they don't end up over leveraged, or they keep a reserve for things that could go wrong. What are some things you're seeing happen to operators right now in this market?
The biggest thing is in assuming in underwriting, assumptions can be very lax, or they can be very strict. So the biggest thing is the LTV, loan to value ratios, are very, very important. Very, very important, because you don't want to over leverage. A lot of people who are in trouble now, they over leverage to 80% or 82, 84%. So they were thinking to do the renovations and increase the rents. That has not happened. As you know, in the last 2, 3 years, 2.5 years, the rents haven't increased 3, 4, 5%. In certain very good areas, rents have gone down. They have gone down, not up. So,
Austin, Miami, New York, Boston, Atlanta. I mean, you name it.
you name it.
Florida, as Arizona, like you name it. There are major cities and major states that are on the
Yes.
decline, rents going down. When everybody says, "Oh, rents never go down,"
Yeah.
in certain markets are actually capable because their rents were so high to begin with, they can actually come
Rents
down.
go down and occupancy goes down. Then it's a double whammy. See, then it's a double whammy. Then you're losing the cash flow, of course, is drying out with the interest rates being where they are. They are not going down. I mean, we just have government is shut down now for 3 days. I mean, it's just ridiculous. Warren Buffett, I was reading an article this morning, even though on vacation, I get up early and kind of enjoy myself and, read this new news. Warren Buffett just put out a statement that the stocks are overpriced, which is true, which is very true. Market is going up and up and up, but there has to be a limit. There has to be a shortfall of 10, 15%, for the properties, I mean, for the companies. Just, the PE ratio is price to earning ratios are so high. I remember the time when we used to buy PE ratio of 10 or under. Now the PE ratios are 200. What? 200 for the future earnings. And that is just not, and minus, hold on, lots of these AI companies and lots of these high tech companies, they are minus PE ratio. What that means is they are losing money right now, but on speculation, people are buying the stock and paying high price. Anyway, we are
And
not
it
here to talk to other people, but we are not CPAs or attorneys. We just give our views, for entertainment purposes only. Yeah.
and it's interesting because this is entertaining for us. This is the game for us. If we looked at it like work, we probably wouldn't want to show up. It is we invest for the joy that it gives us in the sense that we have extra freedom, extra capital, extra opportunities, and the
Yes.
stock market is a part of the equation, right? So we see
Yes.
the stock market. Warren Buffett saying the stock market's overpriced. Stocks are heavier than they should be. I know people right now who are saying, "Oh, I've got to get into Nvidia," and my thought is, you should have been in Nvidia 4 years ago.
Yeah.
To get
Yeah.
into it now while it's at its highest point it's ever been sounds crazy to me. But
I
to
know
them, it
that.
seems like, oh my God, like it's going up. I should get more of this. That I'm not wired like them anymore. Maybe I
Yeah.
was at one point. So
Yeah.
the
So true. So
the,
true.
the
You,
operators though, Vinny, in real estate, they're having the same problems. But real estate's slow. Like we know the stock market will drop. But
yeah.
then what? 9 months later, it'll bounce back. 18 months
Yeah.
later, it'll bounce back. The real estate market drops are longer. And the
Almost 3 years, brother. Two and a half
right.
years. It's been down, 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 and people are just looking for somebody. I just read a statistic: $880 billion is coming due before the end of the year. What that means is it's going to be panic selling. It's going to be foreclosures left and right from October, November, December, because they're just hanging on, hanging on, hanging on to see if the market takes a turn. But it's not happening. I don't know what's going on, man.
The last three major purchases we've done have been we've only got 4 months before this loan comes due. We've got 2 months before the loan comes due, 6 months before the loan comes due, and they're only talking to us now, and now they're saying, whatever you want, just get us out of this loan. There's a
Yeah,
monster amount of desperation in these transactions right now.
right,
So I mean,
right.
this is just the beginning. Like this is just what we've done in the last year. So I know more is coming. More is coming next year, the year after. So for the operators in those situations, because Vinny, I'm looking at them saying, wow, you could really save this. You could, I'm going to save it the same way you could save it. Let's
Yes.
talk a little bit about never giving up because I have one operator who's super sophisticated, very intelligent, very talented, and he's going to hand us this property because he just doesn't want to do this deal anymore. He's done
Yeah.
with this deal. He's talked to his lenders, he's talked to his investors, and he said, look, we're not going to make any money here. In fact, his statement to me was, I've lost money on every property over the last 4 years.
Oh,
He said it's par for the course. This was his words. Par for the course. He said, I'm just going to do a new deal in Florida, a much bigger deal. It's $5
oh,
million, and I'm going to go do that. This is a mindset where he's absolutely going to lose money and he's kind of cut his losses. What do you think a person could do if they've got investor money, right? They got lender money. In fact, I've got 24 people that I can think of that are in this situation, 20 24 lenders. They're private money lenders. I'm sorry,
Oh
it's
my
26
God.
private money lenders, one operator on 5 plus 4, 19 different single family home properties.
Wow.
Let me take that back. It's 14 single family home properties and then five really small commercial properties under 5,000 square feet. So they're very, very small. And these guys are struggling, Vinny. But the path we're going to do is you're going to have to reposition debt. You're going to have to go and do a little cap raise. You're going to have to raise, like, fill the units. Right? Instead of trying to sell these things, you need to just rent them out and get some cash flow going. Why is it, do you think, that some operators don't see that path, don't take that action?
You know, gosh, it all depends. I'm sure every operator is trying every which way to cling to the asset so that the investor's money is not lost. See,
Right.
because that's the number one thing, right? And it can only happen, maybe this particular operator, maybe they've looked at it to look at how can they cut that whole portfolio in half and sell out the half and then save the other half. I'm just thinking out loud, in
Yeah.
certain areas, maybe the rents will come back, maybe the occupancy will go up. So they need to kind of look at what's bad, what's ugly, what's good, differentiate. That's how I'm thinking I will do if I were in that situation, to see what I can say to save grace for the investors. Many times the investors are on the top. So they would love if an operator is doing everything possible, which is the truth, to
Yeah.
save their equity, to save their investment.
And I think that's
Tough time.
fortunately the guys I'm working with, one of them's just not sophisticated. The other one is sophisticated enough. He even said it to me, said I should have contacted you 2 months ago. Maybe we would have been able
Oh,
to, be further along by now. But
yeah,
they're going to have to go and do a lot of work. So embrace setbacks. You gave me some notes. Embrace setbacks as learning opportunities rather than failures. How does an operator who's put themselves into a bad situation, has to go back and do a capital call, how do they turn this around so that it becomes a positive for them?
Again, it's glass is half full, half empty. You got to see what side of your portfolio is got some glimmer of hope, let's say, and you feel that the market is going to turn around in 2 months, 3 months, 5 months. Do everything possible to talk to the lender, to the banks, to get the debt, to even get some very strong investors in your portfolio, to have them come in as partners with you so that you could buy, bring them in so that their money will be doubled. I mean, but you got to be sincere also, If the money is going down the drain, you got to cut your losses and get out of it. But try to do every which way to save the equity, save the assets, save the investment, I guess, is the main
I,
thing.
I love that. Save the equity, save the assets. The lessons come through what creativity you have to do. It helps
Yeah,
you with underwriting in the future. It also helps you learn tools in the present. So maintain focus and momentum. So even when the progress feels slow,
yeah,
maintain focus and momentum on what are the things we should be focusing on right now. So even lenders, because this is the other thing I'm doing is I'm educating the lenders on how to pace themselves and set true
yeah,
expectations and understand, okay, like I'm involved now. I didn't start the problem. I'm involved. This
yeah,
is the operator where they're at. We now have to play ball. Otherwise, in many of these cases, some of them are second position lenders, Vinny.
yeah.
So they're
That's
probably going to lose to the hard money
lose.
lender at first position.
Yeah,
So they have to, some of them are now becoming owners. I'm telling them they just take the property back. This guy will hand it to you. Now you become a accidental landlord, but your debt now becomes equity. And that's a
I see.
solve
Okay.
for them. But for them,
Yeah,
Vinny, it's hard for them to focus on the positive. It's hard for them to focus on what to do next. So
no,
what do you
that's
suggest to lenders or investors who are scared right now that they're not getting good news. None of them are getting good news. Let's say payment stopped 8 months ago, payment stopped 3 months ago, and they're getting a little concerned. What are the steps that a lender can do to stay focused on to get themselves to a better place?
I like your concept, what you just said, because see, the lenders give money to get returns, and they know real estate is risky. So, if the business of an operator is flipping the homes, hopefully they could look and do some research how they will be able to bring back into normalcy in 2 months, 3 months, 6 months, lay out a game plan where the lender can really say, oh my gosh, you know what? I want to work with this operator because they have a game plan to bring it me out. Otherwise, their money is gone. Their money is gone. And they cannot really be the boots on the ground to really take over the asset. Of course, some might be able to, but they would rather have a professional handle it. I like that what you just said that your loan has become equity into it. Or maybe figure out a way how to give them more interest back, more returns back, so that they could feel, you know what, I'm here for a little bit longer haul and the market is going to turn around. So find every single way and ask ChatGPT. I'm telling you, Perplexity, ChatGPT, Grok, put down the situation. I've got 17 homes in these cities, and could you do a deep dive and tell me what cities might be turning into normalcy quicker than others? Then ChatGPT will go and find out all the different places to give you hope. What can you expect out of 17? Where the cities are going to come back better. It's hard for me to tell right away, but the ChatGPT or Perplexity will look at all the different data, and that report you could share with your lender.
I love that. I love it because it's getting more information. It's more
Yeah,
understanding. With when you don't know anything, it's time to learn. And what you shared at the beginning, it's interesting because we're talking about passive investors or passive. Uh, a lender is a passive form of investment. A
totally,
an
totally.
investor, an LP, is a passive form of investment.
Sure.
And your strategy for if it's an equity play, if you brought them in as LPs, is okay, extend it as a debt component, give them a second position, extend it as a debt component. It's interesting that my solution when debt goes bad is I say, well, go get an equity component. Right now, you're
Yeah,
get some exposure to the equity. It's almost like these two solve each other if you're exposed to one.
I
So
love it.
focusing on
Love it.
understanding more about the situation, understanding more about the asset class, understanding more about the market as a whole, the area, and then the whole portfolio. Where can we move things to? Very, very interesting. So developing resilience to navigate market fluctuations and high stake decisions. This is, I think, the next 2, 3 years of real estate because it's going to continue to be high stakes. There's going to be some difficult decisions that sellers make, buyers make, operators make, lenders, investors are making. How does a person, because we know real estate, you stay in it long enough and you're successful. It's got a
Yeah.
long-term effect. It's got the tax advantages. It's got the
Yeah.
amortization of the loan. It's got the long-term appreciation. It's an
Totally.
intrinsic asset, so it
Yes.
holds its value. And then the depreciation, the tax benefits, or cost segregation, where you can speed it up. There's a lot of benefits to real estate, and anybody who stays out of the market for too long ends up getting destroyed by inflation. So we know inflation
Totally.
is always in the background, whether the market's going up or going down. How does a person develop the resilience to navigate in this market? This is a tougher market than, let's say, 6 years ago, where it was really hard to make a mistake. 6 years ago, the market was going
So
to cover you no
true.
matter what.
You could make mistakes and still the market will take care of your mistakes. It was just going up and the interest rates were going up. I mean, the rents were going up, and you could, do the renovations and you get your money back. The payback was quicker, but not now because so much new product came and they were giving 3 months of free rents. But the good thing is that the apartments, especially multifamily, lot of markets absorption has happened already. So you're on the way up now. You're on the way up. So if you could really set that stage with the lender and your equity partner, limited partners, be frank, be open, and share with them that market is risky. I mean, real estate is risky for sure, but what can we do today to save their equity, to save their investment? That
Now we're
should
going
be
to
the
go
number one.
into
Yeah.
we're going to go into the real what Vinney Chopra is doing. So Vinny, where are you seeing opportunity right now? So
You
if they're going to
know,
be resilient and they're going to start
thinking,
underwriting tighter, making sure that planning for high interest rates, planning for higher insurance, planning for higher water and tax and higher
yes,
labor costs, and
I
difficulty
think,
with the banks, right? The banks are going to have more strict rules. How does
yes.
a person win in this market?
I'm so glad you're asking me this. In 2025, we were able to get tax abatement on one of my deals, which is $63 million deal in the Houston area. We don't have to pay $895,000 a year in taxes. It's pretty expensive. So we got abatement now. So that will increase our NOI by almost $900,000. So we are positioning our asset, 300 some units, which is very nice. B plus, you could say, nice area. But the thing is, you've got to take actions to reduce expenses, insurance rates, taxes. Those are the two pillars. The other thing is adjustment of the rate law. So we did do capital call, short one, and we locked the rate. So that was the other part so that the interest rate hopefully will be going down. We need to really cut by point 0.5. That's going to really help a lot. Really help a lot. A lot of assets.
We're looking
That
at a Fannie Mae loan right now. Yeah, it's Fannie Mae. We're looking at it, and they were saying they're quoting us at 6.75%,
nice,
which
nice.
is amazing because we did a 8.5 2 years
Yeah.
ago. It was not
Mhm.
not a great time to do that refinance, and I'm looking at it
Totally.
saying I got yield maintenance, but I'm starting to weigh that out. Maybe it almost makes sense if I hold this long enough. But what you said about the insurance, we just dropped on the Cleveland portfolio, went from $440,000 a year in insurance to 220,000. We cut it in half. And then on the 80 units in Jackson, we went from 78 down to 30,000 a year, which
How did you
is
do it? Did you do master insurance plan? Yeah, that's what I saved money too. My bill was 1,225,000 in Houston. So many assets I had. So then I did master insurance where I threw all the properties under one plan. It reduced it by 43%. I remember. Oh my gosh, that's the best thing. If anything, anybody watching us or listening to us, please do talk to your insurance agent so that you could put your all the assets, hopefully. I know one company even wanted me to start my own insurance company. What?
they said,
But
Vinny, look at how much I mean, look at what you're doing here. You get paid the commission.
but I didn't go with that. I just said I'm going to focus in one particular thing. Let me not divert. But you're so right. There are different ways. I would suggest everybody listen to us, following us, whatever situation you have in your mind, or problem you have, or some situation in your business, give it to ChatGPT or Perplexity and ask them, consider that you are a CEO of this company. It's got this. We are facing like this. As a COO, operating officer, a chief operating officer, what would you do? And you'll be surprised how many solutions might come, which we would have never thought of. Literally, I'm telling you.
And
So
I'm just
AI,
gonna
yeah.
I'm gonna rip off really quick fast expenses that I know for sure we're saving right now. Water bills. There are leaks in buildings, and the leaks have been happening. We only know now that we've owned them for 6 months. Now we can actually track and trail. We can see the leaks happening on a building. That gives us a way to go save money. There's efficiencies with shower heads. There's efficiencies with the toilets, switching away
Yes,
from these
yes,
5 gallon flush to the 1 gallon flush. We're finding efficiencies in heating. We're switching people over from us being the boiler, running the boilers, to switching over to individual heating. We're switching from the hot water tanks. Now we're switching that over to high efficiency furnaces.
yes,
There's the insurance. We talked about tax abatements.
yes.
Another tool that you can use right now, and we're also finding taking management in-house, vertical integration as you scale
Amazing,
up, getting
amazing.
away from the contractors who want 2/3 up front or 50% of the money up front, and going with guys that work specifically for your company. Uh, then virtual assistants, working with international partners
I love
versus
it.
does everybody need to be in person on staff? A lot of this stuff is done behind the scenes using the software. So there's a lot of efficiencies that I think operators just aren't paying attention to that are available where you can save tens of thousands of dollars depending on how many units you're actually operating. So there's a lot of ways, Vinny.
I
So
love it. I love it. I just remembered about this 156 units we used to own in Freeport, Texas. And you know what? The thing was, we advertised that we're going to go through every apartment and look at the leaks and all the flappers on the toilets and everything. But we didn't say we're going to put the shower heads to the lowest level. We confiscated so many massager shower heads. People had them going bottom like using like crazy. And that's what we did. We took out all of them, brought them to the office, and put the smaller heads. That reduced the water consumption so much. Oh my gosh. Oh my gosh.
repair the flappers. It's there's a lot of things you can do on a property. We're just talking about the high level big ones. There's garbage facilities. Like there's so many contracts that you have on a property that get nuts. Electricity is one. That usually, like right now, you buy a property and a lot of them are LED, but these older properties have halogen lamps.
Oh, brother, I'm on my weekly call. Abundance mindset. Thank you, Roger. Good to meet you. You know, I saw my friend after 30 years over here. 30 years. Oh my gosh.
Cancun, Cancun. Everybody comes to Cancun. So let's wrap it up. We're going to be at the summit October 23rd to the
Yes.
27th. Vinney Chopra will be there on October 23rd. We'll be masterminding. We'll be having dinner. We'll be just hanging out. Really, it's a weekend for tax strategies, wealth strategies,
Yes.
operational strategies, what's going on in the market, building your team, connecting with people, getting to that next level. Everybody in the room is looking for growth, and they're
Yes.
primarily we have 50 accredited investors who are already registered, will be in
I
attendance,
love
confirmed
it.
attendance.
Love it.
We've got 20 more on the way, soft commits, and many few people who are not quite accredited, but they are millionaires will be in the room as well. So
Yeah.
this next couple of weeks, for everybody who's listening, it's not easy to stay in real estate when you're running things the way they used to run. But if you're running things, underwriting properly, bringing down the price to where it belongs, negotiating the terms to a more reasonable manner, getting to cheaper debt, right?
Yeah.
Now is a good time to be refinancing. There's a lot of opportunity to be found in the market right now. So, Vinny, this final statement we have is the road to wealth is rarely smooth, but those who refuse to quit achieve the greatest returns. You've survived 3 major real estate crashes
Oh my gosh.
and you
Yes.
come out bigger every single time. What piece of advice would you give to an operator, to an investor, to a lender right now to make sure that their money is not stagnant, to make sure the money is growing, and like you said, protecting the equity, moving the projects forward, and getting payments happening again?
You know, it's a circle of consultants and friends and lenders you have around you. The equity is investors, the loans are from lenders. So I remember the time you brought me back 7 years back. I need $8.5 million loan to throw at Fannie Mae's face because they were giving trouble, in Atlanta. And I got that loan, 8.5 million in 15 days. 15 days, brother Bo Eckstein, through Conventus gave me. We were on vacation the next week. I never told the lender, the hard money lender, and we were in Japan at that time. And I gave power of attorney to my attorney who's been with me for 18 years, Milton Goldgrove. He did all the documentation, closed the loan, wired the money, 8.5 million, and we saved our investors money. I still remember that. So it's possible. The thing is, you got to be in the right meetings, right? And that's what this summit is about. You would come with your challenges, but you will go after from there in 3 days with solutions. And that is the beauty because people who will share with you ideas, you would not have thought about before.
That is the absolute truth. Vinney, thank you for joining us on your vacation. This is Buns Thursdays. We do this every Thursday at 9 a.m. PST, 12 p.m. EST. Cheers to your success. When you have a choice, always work with the best. We'll see you on the next one.
See you
Enjoy
next
your